Well, Mr. President, on another matter, last week the Biden administration's left-wing majority on the National Labor Relations Board issued a ruling in a case with far-reaching consequences for free speech. The decision had its roots in a quest by the board's activist general counsel to appease the core Democratic alliance of big labor and progressive activists. This comes after President Biden fired her predecessor just months after his inauguration. The facts of the case are simple. An employer terminated an employee for violating a content-neutral company dress code that prohibited employees from displaying causes or political messages unrelated to workplace matters. The employee refused to comply and was fired. Breaking decades of precedent, the NLRB now says that the employer was wrong to do so and must rehire the employee and provide back pay. For decades, American labor law maintained important and fairly straightforward speech protections. At work, employees have a right to speak about work. That is, employees have the right to concerted activities in the workplace when they relate to wages, hours, and working conditions. They can also work together to form or to join a union. But these protections included a clear distinction between labor advocacy and political agitation. People have the right to say what they want on their own time, but our labor law only protects political activity or slogans that are a logical outgrowth of speech related to wages, hours, and working conditions. Well, this particular NLRB apparently sees no daylight between activism for left-wing political causes and advocacy connected.
Please watch out for this. You may be missing out on extra money from the federal government. Officials say there are thousands of Americans that have leftover refund money. But the good news is that there is still time left to claim your refund money. My dear friends, please make sure that you watch until the end of this video. Also know that every Friday, I will be announcing several winners for the $75 Walmart gift card giveaway. If you would like to enter these weekly giveaway, friends, do make sure that you click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning these giveaways. According to CNET, the Internal Revenue Service might owe you money from unclaimed 2020 tax refunds, but the time is running out to claim it. If you did not file a tax return in 2021, you could be missing out on money that the IRS is holding for you. However, the IRS will not hold on to these funds for much longer. Each year, as tax season comes to a close, the IRS announces the amount of money it is holding in unclaimed tax refunds. Although the official amount for 2021 has not been released yet, based on past years, the unclaimed refunds could be significant. Last year, the IRS held $1.5 billion in unclaimed refunds, with an average refund of $893 per person. According to the law, the IRS keeps unclaimed tax refunds for at least 3 years. Then after this period, the money is transferred to the U.S. Treasury. You have this until spring to claim any 2020 tax refund that the IRS is holding. The deadline for filing your 2020 tax return this year is April 15th, 2024, since returns for prior years cannot be filed electronically. Ensure that your return is postmarked by this date and addressed to the correct IRS regional office. There is not an easy way to find out if you are missing a tax refund from 2020. The IRS's Where's My Refund tool only shows the status of filed returns, and the best way to check it is by filing a return for that year. Experts say to keep in mind that if you have not filed your tax return for 2021 and 2022, the IRS may continue to hold your 2020 tax refund. Additionally, if you were expecting a refund for 2021 but did not receive it, it might have been offset to pay past due federal taxes, state income tax, child support, or other federal debts. You should receive a notice from the Internal Revenue Service or the Treasury Offset Program explaining any offsets to your refund. Also, friends, according to Yahoo News, while President Biden's broad student loan forgiveness plan was blocked by the Supreme Court, his administration has still managed to forgive federal loans for millions of borrowers through alternative channels. For most recipients, this relief is considered a tax-free gift from the federal government. However, depending on their state of residence, borrowers may face tax obligations at the state level. Typically, forgiven federal student loan debt under certain programs, like income-driven repayment plans, is treated as taxable income. However, due to the crisis-era American Rescue Plan, federal student loan debt canceled between 2021 and at the end of 2025 is not considered taxable income at the federal level. This exemption can lead to significant savings, especially for those concerned about potential tax implications from student loan forgiveness. For example, if a borrower earned the median U.S. household income of approximately $75,000 and had $20,000 in loans forgiven, they would usually face a tax bill of $4,400. But under the current exemption, this forgiven amount does not count as taxable income at the federal level. Nevertheless, some states have their own laws regarding the taxation of forgiven debt. Currently, 5 states, which are Arkansas, Indiana, Mississippi, North Carolina, and Wisconsin, impose taxes on forgiven student loan debt. Therefore, borrowers in these states may owe taxes on their forgiven debt when filing their state returns. Given the complex and evolving nature of tax laws, borrowers who have benefited from loan forgiveness may benefit from consulting a tax professional. Since taking office, President Biden's Education Department has forgiven $138 billion in student loans for 3.9 million borrowers. This forgiveness has occurred through various established programs, such as income-driven repayment and public service loan forgiveness. And additionally, President Biden has introduced a new income-driven repayment plan, which is known as SAVE. It boasts 7.5 million enrollees, and the administration has also made enhancements to the public service loan forgiveness program. So despite the setback from the Supreme Court, the Biden administration is actively exploring avenues to expand eligibility for loan forgiveness through proposed regulations. Well, my awesome and amazing friends, that is the end of my daily stimulus update video for today. Thank you so much, friends, for being part of this community. I will be announcing several winners for the Walmart gift card giveaway this coming Friday. If you would like to enter the weekly giveaway, friends, do make sure that you click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning these giveaways. Thank you, and have a wonderful and very blessed week.